What's going on YouTube? It's Sankey and I make videos on the stock market. Guys, as always, I've got a jam-packed one for you today. But before I get cracking, please check out that link down below. That's trading 212. Go and grab yourself a free share of stock worth up to $100. Now, without further ado, let's take a look at the portfolio. Up on screen is my YouTube growth portfolio, currently sitting just under £50,000. Now, if you're new to the channel, how it works over is we will jump on the plays that I suggest each and every week. And we've had a fantastic week in the stock market. Our plays have been skyrocketing. I can give you a couple of the names. We have Ely's Game, we have Microvision, we have Marathon Patent Group, we have Alpine 4 Technologies. It has been fantastic. The stock market has gifted us this week. So do hit that subscribe button, become part of Stockflix. We have fun over here and we make some good money. Now without further ado, let's jump into the first play. Alright guys, so if you've been rocking with the channel, last week I did a video on 3 sleeping giants and how they're set to rise and how you guys should position yourselves ready to take advantage of that. I covered Nike, I covered Apple and I covered Amazon. Now, so 2 of them have done just that. They're now trading higher, reaching all-time highs. The first is Nike. So guys, if you remember, I did say that Nike were coming out with their Q2 results. So you guys should position yourselves in Nike, load up, because I do expect them to beat analyst estimates. And if they beat analyst estimates, their share price will rise, and it will rise to all-time highs, which it did. Now, I'm not going to go into Nike's Q2 results. That's not what I wanted to talk about. But what I did want to highlight to you guys is we are coming to the end of another reporting season very soon. So a lot of companies in a month's time, month and a half's time are going to start releasing their Q4 numbers, right? And guys, this is significant because this could be a catalyst to boost a lot of the prices in your portfolio higher, right? So you want to track that. You want to make sure that you're positioning yourselves in those companies which are set to deliver good results. And this is going to give you an extra boost in your portfolio just by thinking ahead and positioning yourselves ahead of that catalyst. So it's worth noting that not every company is going to have a share price increase off the back of good earnings, right? But this is a tip for you guys. Go back and look at how their share price performed off the back of their last earnings report. If they had a good earnings report and their share price didn't move, then that's probably going to happen this time round. But if their last earnings report was good and their share price increased, then the same thing is likely to happen again. That is how I spotted Nike would increase off the back of good Q2 results. Next up, we have Apple. Now, it's been a fantastic day for us Apple shareholders. Apple has finally broken consolidation, breaking through that $130 mark off the back of rumors that there's a potential electric car coming in a couple of years' time. So guys, let's quickly jump into the share price graph. Let me show you a few things. So up on screen, this is the Apple share price graph. In this red box, you can see this is where Apple was consolidating. If you remember, guys, I did say that that support line at the bottom was getting higher and higher, as you can see. And all it takes is a catalyst and the Apple share price is going to break through its 130 resistance, and it did just that. Now currently standing at $131. So quickly switching to the NIO share price graph. Now a lot of us are waiting for the exact same thing to happen to NIO. We're waiting for NIO to break through consolidation. We call that the breakout and surpass that $50 resistance line. Now NIO's had some really good trading over the last few days, some really good positive upwards momentum, as you would have seen. And a lot of you probably thought that NIO was going to surpass 50 today. But guys, it does take a catalyst to break through consolidation, right? Now, Apple was in consolidation for a long period of time. So as you can see, way back in about August, that's when it started this consolidation phase. Now, NIO's only been in consolidation since the end of November, so not long at all. And it does take a catalyst, and it's taken Apple a few months to get its catalyst, and that is the rumors of a potential Apple car in a couple of years' time. Now, that is why you saw the share price drop today and didn't surpass that $50. And I do think the upcoming catalyst, like I've said before, could be delivery numbers in December, which should be announced on the 1st of January. It could be NIO Day as well, the run up to NIO Day, or it could be announcements on NIO Day itself. And I'm sure NIO have a lot in its pipeline that they could share with us that could act as a catalyst to get it out of consolidation. So in terms of what we can expect from Apple going forward, it was only rumored that they are coming out with an Apple car. It's not been confirmed by any Apple employee, but there's a lot of of different things that they can do within this segment, guys. They could get into the battery space. We know there's billions and billions there. They are working on technology there to produce, you know, cheaper batteries that allow cars to drive for longer. They could also get into the licensing of technology for autonomous driving. So all of these are massive markets for Apple to get into and, you know, get some serious market share going into the future. So this does change my entry points. This does change my price forecast for Apple. So in terms of my entry point, guys, if you can get in below $131, this is good, right? This will set you up, get your position there. And then going into 2021, at the end of 2021, I do see Apple having a share price of around $170. This will give you a nice 30% uplift on your shareholding if you're able to get in at 131. Now, 30% might seem small compared to a lot of the returns that we've been making here over on this channel daily, but you got to remember, Apple is a massive organization, right? They're cash rich. They're very innovative. They've got a fantastic brand attached to them, and they're part of a longer term portfolio, and they're not going to be as risky as a lot of, you know, the other plays. So this is an investment that you can rely on going into the future. So that's why they're in the top 5 of my holdings in my growth portfolio. All right, guys, so it's question of the day time. Now I'm going to answer 2 questions because I've received a ton of questions from you guys and I do want to try and get through them. This first question is from Shimo. The question is, Alpine is now at $2.43. What is a good entry point now? So thank you very much for sending in this question. So guys, if you've been rocking with the channel, you know that Alpine has been the MVP of our portfolio this week. It's been absolutely flying. Now, I do still have very good hopes for this company going forward. Like I said, that acquisition model that they have, that vertically integrating the portfolio companies, is amazing, right? And it really does. They can go into a multitude of different industries and, you know, acquire different companies. I actually had a subscriber who suggested that they could actually acquire a 3D business company, and this is correct. Their printed circuit boards could be used for a number of different companies and applications. In terms of my entry point, now they've had a massive run up in their share price, and I know a lot of you wanted to jump on today or maybe even at the end of the day, because I have a rule that if I'm investing in a company and it has a run up in a share price, I might jump in the next day, but I'm not going to jump in the day after. There is going to be some sort of sell-off on the way. You know, this is still a penny stock. You had a lot of short-term investors in this, and they're just there, like I said, for the short term, and they are going to sell, and this is going to cause a bit of a sell-off and a share price drop. So in terms of my target entry price, if you can get in under $2, so it is going to acquire a little bit of patience, because they might rise, they might not rise tomorrow, and, you know, throughout the rest of the week. But $2 is a good entry point, and like I said, this company has fantastic future potential, so you don't want to miss out on this one. Put this one on your watch list, guys, if you're not already in Alpine, and do wait for some sort of pullback, sell-off, significant drop in their share price. This next question comes from KT. The question is, historically, do stocks dip over the holidays? I'm looking to get into NIO again, but not sure when the right time is, considering $49. So thank you very much for sending in this question, guys. First things first, this is why I built the EV cheat sheet over at the Patreon, and I update the share prices, the relative valuations each and every day, and I have all my buy zones and entry zones there, so you guys are never left in the dark, so you always have something as a guide, right, when you're looking to make an EV investment. Now, in that EV cheat sheet, I did say that a good entry point is $46. I put it as $46 because, as earlier mentioned in this video, NIO does need some kind of catalyst to push through that $50 mark. I know it looked like it was going to do so, but it needs that catalyst, and it's coming very, very soon. So you don't want to be buying at $49. That is a little bit too high right now. So in terms of if stocks dip over the holidays, guys, if you don't know, I actually used to be a banker, and back in my banking days, what I used to see was a lot of short sellers in the run up to holidays would exit their positions, right? And there'll be a lot more increased optimism, there'll be a lot more buying, and this would drive prices up. So I actually saw an uplift pre-holiday season. Then going over the holiday seasons and into the new year, again, there would still be momentum, guys. Again, it's a fresh brand new year. There's a lot of capital to allocate from fund managers, and also there's a lot of deployment within 401ks, investment schemes. So it's actually pretty good time in the marketplace, and a lot of short-term traders did benefit from this positive momentum that was often seen. Now, that's not guaranteed. It's a stock market. Stock market can go up and down for a variety of different reasons, but that's just something that I witnessed back in my days. So that brings us to the end of the video. Please hit a like, it really helps the channel out. If you're new, do go ahead and hit that subscribe button. I post each and every day. Guys, as I always say, the stock market is rapidly moving, so do check the channel each and every day so you never miss a beat. And I'll catch you guys on the next one.